Good morning, traders. It is Wednesday, December the 4th. Taking a look at the charts yesterday, big panic in the selling, in the stock market, big selling going on. The VIX spiked up, put call ratio jumped up, and more or less everyone was scrambling to sell their stock positions and piling into the safe havens like bonds, utilities, and precious metals. Now, if we take a look at the market, now overall, this is the first crack to the downside. First time we saw real fear hit the market. You can see the volume here at the bottom, the last two trading sessions. Today, we've already got good volume going on. And usually when we start to see the volume pick up, that means we're getting close to some type of reversal usually in the market. Now overall, this is the early stages of the first drop. I wouldn't be surprised, and what we're looking for is some type of sideways movement here, some type of little potential bear flag. Might only last a couple of days at max, but then we're going to be looking at potential drop. And you can see it could form what you could argue here. It would be a little head and shoulders formation. We're going to have a neckline across here. And obviously there's a pretty good void from this previous high here to this from the current level down. So there is some pretty good potential downside. Obviously the key moving averages will act as support or resistance. The 50-day will act as a support zone, and it happens to be these previous highs, both of these major tops. So that'll be the first level of support. 200-day, obviously, it tracked all the way back through here. You can see how it's acted as major long-term support in the market. So that would be another level on the chart that could potentially act up as a support zone. Of course, we're going to have a support trend line across here as well. Now, overall, the market usually doesn't always take a little breather here, but I think we're going to be into something where we're going to see a little sidestep action, and then we could end up getting an inverse play in the market for a drop, a flush out low, and more or less bonds starting to perk up. The safe havens are starting to reverse to the upside. Metals haven't quite fully technically reversed yet. They are showing signs of life. I'll cover them in just a minute. But overall, if we look at the short-term analysis chart of the market, we've gone from red bars, which means we're in a technical downtrend, to orange. It reversed, and then we've been in this uptrend. Now, yesterday, big drop to the downside put us into an oversold territory. And because the technicals are still in an uptrend, we had this move here, we had this little bear flag, and then we had a 100% measured move at the open, and it put us into this lime green area, which means the market is oversold. There's panic selling. It usually acts as a buy point. Now, overall, because the more or less everyone's piling into the risk off assets in a strong way, this doesn't act as a buy signal. We're seeing the market this morning rally higher, which is what we anticipated. This is the 20-day moving average, and more or less it came up and it's tagged the 20-day moving average, and potentially we'll see the 20-day moving average start to move lower, and price will most likely get stuck underneath that. Now we'll also have the 5-day moving average moving down quickly, so we're going to have a couple key moving averages over the next couple days here with price stuck under it. And you can see how the market in general, if we were to look at this 30-minute chart, you can see how the market loves to bounce off this 5-day moving average. When you got a high momentum move, it just constantly finds support there and holds its ground and keeps going. And now we've clearly broken under it with a bear formation, and then we've broken down this bear flag, and now we're under both the key moving averages. So we've gone from an upward bias very quickly to now we are into orange territory or neutral bias in the market, and we could end up seeing the market by later today potentially roll over, and we could get into an inverse ETF and looking to get into a safe haven as well. I'd like to get into metals, but the technicals haven't fully reversed. Bonds have already reversed yesterday to the upside, giving us a technical buy signal. So we'll see which one we get into and how the markets move today. If maybe metals will start to give us that signal we need. Looking over at, let's take a quick look at bonds. Bonds are down 0.4% this morning. If we look at the market here, got oversold. And yesterday, strong bounce up to resistance. Overall, we need to see the equities market. We want to see it roll over and hit resistance. More or less, stocks are bouncing today. Bonds are pulling back, and this could give us that opportunity to get in. But you can see how the market is flip-flopping around here. It's gone from a downtrend to an uptrend, and it got oversold here in the last few sessions. But overall, we want to see it build this formation, this base, where we're seeing it. It's gone higher, Now it's trying to build this base, this formation, and potentially we could start to see this really break out to the upside. This will be a really critical line in the sand, this pivot high right here in the chart, that if it can break through this, which is also an overbought territory, if we get to this red hashtag and break through that, we'll probably see bonds really rocket to the upside because it's triggering a shift in significant momentum. Looking at the daily chart of bonds, you can see here the daily chart, we're breaking through some of the key moving averages. We're above the 20-day, we're above the 5-day, we're stuck under this 50-day still. But overall, the momentum has shifted to the upside, which is why we've got green bars, and it looks primed and ready to pop and break, similar to something we saw over here. Or even back over here where the market's breaking through all these key moving averages near the same level, and then we could see a really strong run to the upside. Taking a look over at the dollar, dollar traded lower again yesterday. It's down again today. I think if the dollar does start to break down, you could argue here this is a pretty big potential bear flag. If we threw a Fibonacci extension on here, we can get the downside move for the dollar. If the dollar collapses, then we are going to see metals really have a pop to the upside, I think. So we got this move, and then this is a 100% measured move to the downside. If this bear flag plays out, we got a pretty good drop in the dollar, which would spark probably a breakout and rally in metals, miners, and other metals as well, silver. Now, if we take a look over at, let's pull up gold real quick here. You can see gold yesterday, big pop in gold. It's still stuck under the 20 or the 50-day moving average. We're far from the next pivot high in the market. The trend is still down. And if we look at silver, it's down today as well, stuck under the 50-day. It's still a long ways from this pattern. Both of them are still making a series of bear flags where the market drops, and then more or less it flags, and then it drops, and then it flags, and then we've seen it drop, and now it's still flagging. So it is still stair-stepping its way down. There will be a point here when it does break and reverse, and we want to get long. And if we take a look over at miners, take a look at GDX. Here you can see it's the same type of thing. It's been moving lower. Yesterday it popped and broke this previous pivot high. So it's on its first push here that it's got upward momentum. So now it's making higher highs. It does have a higher low, and the momentum hasn't fully shifted yet, but overall I think we're set for a buy signal here in gold miners as potentially the safe haven play. Looking over at energies, natural gas down 1.8%. Again, it's in this volatile time where we're looking for a bottom to be formed, something like this, and we could be in something like this, or it could be a really big, ugly bottom, something in a bigger range like that. Overall, something smaller and tighter over here would give more upside potential. We're going to have some key resistance up here. If a small base forms here and then pops and rallies, this will be the first resistance, second resistance, and then 3+ would be the next upside target. So we're letting it work itself out. I feel as though natural gas is somewhere like here or here in the market. I still think there's some work to be done for it to work itself out. Looking over at crude, up 1.62, continues to find short-term support here at these previous lows. Again, it's starting to break this support trend line. If we were to connect most of these lows across here, you can see how it's broke it once, then had a huge rally, closed below it, struggled, more or less saved the day, and then today we're seeing it pop. And it is still holding up, but it's starting to break through, and potentially this starts to chop around under here, and it could form this really strong support level that when broken, we could really see it pick up speed to the downside. But overall, it has recovered this support trend line. If we go from these tops over here, we've got this upper trend line. So at this point, it could still easily recover and push up to that 59.60 level we talked about as the key resistance for crude. But if it starts to break down or give us some topping formation, we may look to get to an inverse ETF. I think there's more downside potential for crude. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.